Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on the SP 500. I'm filming this video right following the CPI reading that we got for May that came in above expectations. And in fact, the market moved down. It was already moving down ahead of the CPI reading. And then we got the CPI reading pre-market. Markets gapped down and followed through throughout the trading session on Friday. This is a scary move here. A big rejection off that trend line. Markets failing to hold that move up that we talked about, snap back above the neckline from this head and shoulder pattern. So in this video, we're going to talk about whether the bullish case for the SP 500 is still intact or whether we should be expecting a lot more downside over the next few months. And we're also going to take a look at the short-term developments that's going on in the markets, giving you guys a broad update on what to expect in the next few weeks, what type of scenarios we can expect. Now, if you are interested in following these crazy markets with us, make sure to smash that subscribe button. Hit that like button if you enjoyed this episode. And now without further ado, let's get right into it. So clearly seeing this technical breakdown here on the price chart is a short-term bearish development, right? There's nothing to say about that. We have to remain objective. Even if there's a bullish macro case that's really building, and we're going to talk about that in this video. Even if that's the case, we have to remain objective around the short-term developments. And this, just from a technical standpoint, is signaling we haven't stepped away from the volatility. In fact, if we take a look at the actual volatility of the SP 500, look at what just happened here. This is a trend line that I think I mentioned a few times over the past couple of weeks. We had these two reactions here off this nice trendline support, and look what happened. A nice, beautiful bounce in the volatility. So from a pure technical standpoint, the next big buying opportunity is just like we've been talking about over the past few weeks. This trendline resistance right there, that is our target zone. If you're bullish on the S&P, you want to be stepping in when volatility is at resistance. That's a key concept in TA. To increase your risk reward, you want to be entering the market when volatility is elevated, not when it's testing support. And so to me right now, as I'm seeing this, volatility is spiking. It's broken out here, and this is the next big line of resistance. That might mean that we make another lower low here on the market. Now, one of the big signs that we're actively watching right now to confirm the bullish setup on equities is the 2-year yield. This is something we've been talking about for weeks now. A huge part of the volatility that we've seen on the S&P has been driven by this 2-year yield rising. A huge part of the volatility we've seen on the market has been driven by this massive rise in the 2-year. And in fact, this rally that we had off the low back in May occurred right as the market realized that the 2-year was stabilizing. Now, with this reading that we have on the CPI that came in higher than expected, look at what's going on with the 2-year. It's spiking massively here. It's up 7% on the day. So this is not good for the short term. So even if the bullish case is continuing to build and the risk reward here looking out 6 to 12 months on the S&P is, in our opinion, still pretty favorable, in the short term, the market has clearly picked a direction here. It's very concerned about that CPI reading that we received, and oil hasn't rolled over yet, right? And that might change. It could be rolling over here. It's down 2% today. We need to see more evidence of that. Oil is by far the biggest influence on the bond market. This is why we've had a higher than expected CPI reading. We've had oil continue to move higher here, climbing 30% over the last couple of months. This is having a big impact on CPI. We're probably not going to see any type of massive rally until that occurs, until you have that breakdown in oil. I wouldn't put high odds on seeing a massive rally, but I think as soon as we do, that's going to put a huge relief on the bond market, and you're going to see inflation expectations just collapse in a very, very rapid way. And if you look at the average return on the S&P leading up to a peak in inflation, right, this represents the average inflation peak going back to 1953. The S&P is trending down leading up to that peak, just as it has been trending down in 2022. But once you get that peak, you've got the S&P that starts to rally massively as it relieves a lot of pressure. Now, this is for the next 6 to 12 months. Is it possible that within the next year, we see some type of a major unexpected collapse of the financial system as we see some over-leveraged banks around the world go bust? That's absolutely possible. But that's not the type of thing that we're expecting right now. Right now, I think the big story to watch is oil and inflation. And based on the research that we have made, we think the risk reward for the CPI is very skewed to the downside. Oil is extremely overextended. It's had a tremendous run over the last couple of years. And even when you compare it to other wars we've seen since 1967, the oil market is clearly well priced for the Ukraine-Russia war. So any type of de-escalation in the war would trigger downside on oil, downside on CPI, and would be a tailwind to equities. Now, of course, this is a bet, right? And we're well aware of it. Oil's momentum is clearly still to the upside. If we take a look at the MACD on oil right now, it's still pointing up. So, there's no big evidence right now that it's rolling over. But in our opinion, it would really take a lot of bad news regarding supply, regarding geopolitical risk to continue pushing oil higher. And once the trend does reverse, it can go very quickly. Look at how oil was behaving back here. It was very strong, and that trend reversed very quickly. Same thing here. Pretty strong trend, reversed very quickly. And of course, we could be wrong, especially if oil continues going parabolic here. If you're afraid of that risk, if you think we're heading into some type of a big collapse of the financial system anytime soon, then you don't want to be in equities. And there are a lot of other opportunities in the market. And we discuss all of these on gameoftrades.net. Commodities, cryptocurrencies, precious metals, the bond market, right? Treasury bonds that have been extremely oversold. And we update all of our research and convictions through frequent posts on our website, our ratings dashboard that takes a look at all the big assets that we think are interesting right now, the tech sector, the energy sector, small caps, gold, emerging markets. And we take a look at all of these across time frames, short, intermediate, and longer term, as well as, of course, the watch list where we organize all of our big things to watch right now and organizes the articles that we post on that subject, on that asset that we're looking at. And both of these, the watch list and the ratings dashboard, are going to be updated in the coming days. So make sure to tune in for that and sign up to the free trial at gameoftrades.net. It's 7 days. You can check out the service, check out the features. And we're very excited about the projects coming up for the website. We're working on a model portfolio that's going to be representing basically our entire view on the market and funneling it all down into an investment portfolio showing actual sector and asset positioning in specific percentage points. Now, that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, make sure to smash that like button as hard as you possibly can. And now, in the meantime, I wish you good luck on your trading and see you next time.